Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, December the 13th. The year's 2022. Let's talk trading. Trading routine part 7 with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, I kind of summed up yesterday, or over these past few videos, saying that a lot of times you need to take things away rather than add to, especially when it comes to indicators on charts. But when it comes to routines, you have to have a really comprehensive routine. I mean, from the time you walk into your trading room or wherever you're going to trade, you need to make sure that you've got your environment right, the computer's right, your charts are right, your internet connection. I mean, there's just a whole kind of pre-flight checklist that you have to do to get in. But you can't, be looking for that holy grail of a routine, just like there's no holy grail indicator per se, thinking that, oh, if I do this, then everything's going to be okay. So what's your thoughts on that?
Yeah, I would agree with what you just said. I would even go and extend the time of routine even before you walk into your trading room or wherever you're going to be trading. It needs to happen even before that. Are you in the right frame of mind for the day? Are you hungry going in? Or are you have you overeaten and now you're sleepy? Or are you not feeling well? All those things. Those are things that are important to me right now because I've been sick over the last week or so. And it's like I got to go and check myself and be very careful, knowing that I'm in a state right now where I'm just not up to par where I normally would be when I'm trading. So I got to go and keep that in mind. And that's part of my routine. But some people would like to go and I guess before they start trading, go and maybe do some mild exercise. Some people like to do it afterwards. Just to go and get their blood pumping. And that way they can get some oxygen. As they say, go and enrich your brain with some oxygen. And there's some truth to that too. So all these things they matter and. You can't really overlook those things. It's all very, very important. But I would go and say on top of that, you need to go and have some type of plan. We talk about having a trading plan. Well, beyond that for me, have a life plan, have, set yourself up so that when you're walking into your trading room, you're prepared to go to battle, because that's what you're doing. You go into battle. And then further to your point of simplifying things, yeah, absolutely. Do things in your routine that makes it easier. There's only a certain number of things that your brain can go and simultaneously do. We're good at doing things simultaneously as human beings. We were designed that way. But the problem is, we still have limitations. There's only a certain number of things we can do simultaneously, and, it's sort of like, that the old, chart. I know you used to show it a lot, but the chart on drugs, where you got so many indicators. You get so many indicators, you can't even see the chart, right?
Right, can't see price, right.
Exactly. So, simplify things. I think you sort of know full well that my whole effort in trading is my first rule is preserve capital at all costs, right?
Right.
In fact, we had a conversation on the phone yesterday about that. Well, that's the first thing. My second rule it's not as important as preserve capital, but it's up there, and that is keep it simple, stupid.
Yeah.
Whatever I can do to make trading simpler, that's what I'm going to do.
Yeah.
And the reason why is I can make good decisions, or quick, not necessarily good decisions. I can make quick decisions, based on that. By the way, price is like moving around. So I don't know. I'm not sure what you're showing, sir.
1 minute chart.
It's bouncing around. And the reason why is because we've got CPI coming out in about 2 or 3 minutes. So
right.
It's doing its dance.
Yeah. In fact, the trader asked sent an email and was asking about inside bars. Well, you can see this bar I'm pointing at right here. That's an inside bar. So basically, you draw a line at the top, you draw a line at the bottom, then you trade the breakout, and you can see it broke out to the bottom. So if you would have gotten in at 2303, there was a potential maybe to get out, take about 3 pips, pumping out at the double low because that shot down. And part of your routine is knowing what time it is and knowing what's going to happen around certain times of the day, and just having just that awareness, saying, okay, I'm trading right before the news. I'm just going to take, if I get a pip or two and price stops, I'm out because it can flash against you. In fact, Walmal and I were short right before we got on the phone, and we punched out somewhere around here, and then price turned, or was it around here? And then price turned right around and ran like almost 30 pips the opposite way. And when we got back on the phone, Walmal goes, "Are you out of that short?" I go, "Yeah, I got out a little bit after you did." Because and you see this blow off top here, and then you see, I've got the fibs on it, and you see it came back to the 50% and the 61 and almost to like what, the 77 or 8% retrace. It stopped right there on a dime, turned around. So for those fib traders, sometimes this stuff, it's not that it works, but you can use it.
Right. And that's the thing, pick, I think we've talked about this in the past, on these videos, and we certainly have talked about it together. And that is, pick a method, pick a way to doing it. And it gets back down to your point of, trying to keep things, don't have too much stuff on your chart. Try to keep it simple. Pick a thing to go and do that thing and do it well.
Okay, hey, we've got news in less than a minute. Maybe we should talk the traders through the news, even though they'll be watching this afterwards, but they might be able to see what, learn from what we see and how we look at it. See, right now, the spread's widening. I wouldn't do a thing.
Yeah, my spread's up to 7 pips, 8 pips.
Yeah.
Here's what I'm doing. I'm literally sitting on my hands. I don't care what movement I see.
Yeah.
Now, the one thing I have that
they're going to run this thing up.
Yeah.
Let's see. My computer just froze. Nope, I was wrong. They just spiked it down.
Yep. But that's the thing about news. You can have a hunch, but just because you have a hunch doesn't mean that's what it's going to do.
See what it just did? I told you they were going to run it up.
Yeah.
Whoa!
You're about 3 seconds ahead of me because mine didn't run up. When you said that, mine was still going down.
Would you look at that? I told you they were going to run it up. Now, you're going to wonder, how do I know? It's one, it's I don't know. It's an educated guess based on the price action during the last 30 seconds. And they faked you out. Even after it came down, they ran it down to 22.74, and now they've run it up 100 pips. Like I said, that's just, you just see, it's like they almost always do just the opposite of what they want to do because they're greedy. They take out the last few stops, grab that liquidity, and then turn it around. Plus, the other thing is, it's U.S. news, and if it's true, it can't be good.
Well, the thing is, actually, in one sense, the news that came out actually is good for the economy, but it's bad for the currency.
Right.
And as inflation is down right now, according to the numbers that came out, if it's true, inflation's down, not by very much, but it's down a little bit, which means next week when FOMC meets, they've got less reason to go and to come out with a rate change. Now, we all know there's going to be a rate change, but the controversy out there is it going to be 75 basis points? It's going to be 50, it's going to be 100, and this will steer this number, even though those guys know this number already. They know this number several days ago, so they've already made their decision, but they can go and make a last-minute adjustment decision based on the reaction of the markets based on these numbers. So, you know, that's the thing. So now here we are as traders, okay? A lot of these fundamental traders are now sitting out there going and guessing, okay, what is the Fed going to do? What is this person going to do? What is that person going to do? And they're trying to outguess all that stuff. And that's why I'm not a fundamental trader, because to me, that's just way too complicated. I can't even keep my own head straight. I'm going to go and keep, Joe Blow down the road head straight, especially when he's competing with, every Tom, Dick, and Harry comes down the lane. So to me, that's crazy. Now, I say all that, and my dad traded fundamentally, and he did very well doing it. So, if you can do that, hey, go do it. But keep your method straight. And we just hit the 2,400.
Yes, we did.
So we went. So it's funny. Before, when we first got on the call, our range for the day was 69 pips. We're now at 154. That just shows you what a spike in news can do.
Mm-hmm.
And getting back to this whole idea of routine. Okay, here's the thing with routine. You know that this can happen. Okay, and you need to have routine in place that goes and protects you from being on the wrong side of this. Or if you like to go trade this stuff, you need to have routines in place that go and allow you to take advantage of it. And that's part of what we do. But what I will go and say in all of that is keep it simple. Whatever that routine is, keep it simple. So my question is, by the end of the week, are we running this all the way up to 2,500? That would be a number that we haven't seen in a long time.
That's the truth. And I just flipped through all the charts for the traders, and just to show that, all these horizontal lines, it didn't matter which method you picked, but it hit it and it be profitable. And that's the thing. It's you don't need something super complicated. You don't even really need to be able to guess. So really, probably should have been short on the 2,400, but I like to at least let that very first M5 candle do its thing before I would start to look for the reversal, because I've been burned way too many times jumping in, trying to reverse off of that first 1 minute candle. So
and for me, I can't go and do this because I've got an EA that doesn't allow me to go and trade if the spread is over a certain limit. And right now my spread is larger than what I allow my EA to let me trade at.
Oh, wow.
Routine.
This is man, really missing out. But see, it should have had my buy set at 2340
right
at the launch pad, because it launched right through it.
Yeah. The question is, what would the spread have been at that time? Would you been, obviously because it moves so much, you've been okay.
Right.
But the thing is, that's a dangerous move only because, let's say you launched at 2340, and let's say the spread at the time was 15. That means you're getting in at 2355, and then all of a sudden it goes and spikes down to 2325 or something like that.
Right.
Next thing you know, you're now down 50. Now, of course, you would have been.
No, actually, no. When the ask hits that price is when you get triggered in, not when the bid hits it.
That's right. Yeah, because we're going in the right direction. That would have worked going in that direction.
Yeah.
If it was going the other direction, we would have been, if you were looking for a short there, you would have been in trouble.
Now, just another little read here. You see we got this big candle here, then the next one's smaller, the body, and the next one's even smaller. Then it ran up and started coming back down. That was momentum. That was a loss of momentum. So you see now it's coming back down, and we just did the 23 retrace. So if you're playing the fibs, that's what it. But you know what? The fastest 15 minutes in trading is over. So I hope you picked up another tip for working on your routine, and I hope maybe the way Walmal and I saw that news trade, you may have learned something there that you can put in your trading arsenal, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.